What do you think money really is? A tool for trade? A number on a screen? Or maybe the most convincing illusion humanity has ever agreed to believe in? Today, I want to tell you the story of something often called the devil's metal. But this isn't really a story about metal. It's a story about power, trust, and how easily value can be rewritten. This is the story of silver. Throughout history, it has been dismissed as the poor man's gold, but the truth was never as simple as it seemed. Welcome to Moneta Historica, where the hidden relationship between money, power, and history is unveiled. The story of silver is not a modern story. It begins centuries earlier in blood and stone. The 16th century. High in the mountains of what we now call Bolivia, Spanish conquistadors uncovered something that would change the world forever. Silver. In a place called Potosí, nearly 5,000 meters above sea level, a mountain was torn open. What followed was not progress, not prosperity, but a slow, industrial form of hell. More than 8 million indigenous people were sent into these mines. Most of them never returned. But something else died there too. Something less visible, but far more important. The meaning of money. Spain flooded Europe with silver extracted from Potosí. For a brief moment, it felt like unlimited power. Armies were funded, wars were fought, empires expanded, all paid for by this shining metal. And then the consequences arrived. Prices began to rise, and rise, and rise again. Within decades, inflation in Spain reached levels never seen before. The first truly global inflation crisis had begun, because money was never just metal. It was trust, a shared belief, a fragile agreement between people about what is value and why. When Spain shattered that balance, when supply crushed trust, the entire system began to decay from the inside. This is where history whispers its first warning. Empires do not collapse by losing wars first. They collapse by destroying their own money. Silver didn't just buy the world for Spain. It quietly undermined the foundation beneath it. And once that foundation cracked, no amount of silver could hold it together. Now let's move forward in time. The year is 1979. The world is no longer anchored to gold. Inflation is rising. Trust in paper money is beginning to crack. And in this climate of uncertainty, two men from Texas make a decision that will shake the financial system. Nelson Bunker Hunt and William Herbert Hunt. They don't see silver as a trade. They see it as a defense. To them, fiat currency is fragile, something that can be printed, diluted, and quietly devalued. Silver, on the other hand, is finite. It cannot be created at will. So they buy, and they keep buying. Quietly at first, then aggressively, until they control nearly a third of the world's available silver supply. The price reacts instantly. In a matter of months, silver climbs from $6 an ounce to nearly $50. Markets panic. Headlines explode. For a brief moment, it feels like the system is losing its grip. And then something changes. Not the market, the rules. Overnight, credit for silver purchases is cut. Margin requirements are raised. The mechanisms that once allowed buying are suddenly turned against it. The message is clear. This experiment will not be allowed to continue. On March 27, 1980, a day later remembered as Silver Thursday, the price of silver collapses. Nearly 50% vanishes in a single day. The Hunt brothers are wiped out. But that's not the real lesson. They didn't lose because silver was worthless. They lost because they misunderstood the nature of the game. They believed markets punished bad decisions. What they learned instead is that markets punish threats. The Hunt brothers weren't trying to cheat the system. They were trying to expose it, and the system responded the only way it knows how, by changing the rules. Now ask yourself a simple question. Who controls silver today? The people who hold it in their hands, or the institutions that trade it on paper? Each year, roughly 1 billion ounces of real silver are mined worldwide. It is dug from the ground, refined, transported and stored. It exists. It has weight. And yet, on paper, many times that amount is traded every single day. Silver that was never mined, metal that was never touched, phantom silver. How is this possible? Derivatives, futures contracts, exchange-traded funds, synthetic positions, elegant financial instruments, often described as tools for efficiency and liquidity. But in reality, they serve another purpose: control. Because the scarcer the physical commodity becomes, the more aggressively its paper version is created. This is not a coincidence. Paper silver exists to absorb pressure, to calm markets when demand for the real thing begins to rise, to keep prices stable when scarcity should make them volatile. In other words, to protect the system from reality. This isn't a flaw, it's design. And this is where we arrive at a deeper truth about power. As Hannah Arendt once observed, in questions of power, nothing is ever accidental. Silver is no exception. The structure that allows 10 times more silver to exist on paper than in vaults was not created by mistake. It was built to ensure that control never fully leaves the hands of those who manage the system. Because when people rush toward physical assets, something dangerous happens. Trust begins to move away from institutions and toward reality. And that is the one thing centralized systems cannot afford. Now let's return to the present. The world is no longer pretending that everything is stable. Global debt has crossed $300 trillion. Central banks continue to print. And inflation, once dismissed as transitory, has proven to be anything but. Slowly, a familiar question begins to resurface. Is the money in my hand actually worth something? Whenever this question appears in history, attention always drifts back to tangible assets: gold, land, commodities. And once again, silver steps back into the spotlight. But this time, the story is different. Silver is no longer just a monetary metal. It is an industrial necessity. It lives inside solar panels, electric vehicles, data centers, medical equipment, and nearly every smartphone on the planet. Modern technology does not function without it. And unlike gold, silver doesn't simply sit in vaults waiting to be rediscovered. It is consumed. Once embedded into microchips, circuitry and energy systems, much of it is never recovered. Recycling is often technically possible, but economically pointless. So while demand continues to grow, available silver quietly thins out. Not through dramatic shortage headlines, but through permanent consumption. This creates a structural tension. Silver is accumulated as a financial hedge, while at the same time it is steadily erased by technological progress. Gold circulates, silver disappears, out of the ground, into the system, and then beyond recovery. And this is where the contradiction becomes impossible to ignore. If silver is increasingly essential, increasingly consumed, and increasingly difficult to reclaim, then price alone cannot be telling the full story, which leads to the uncomfortable question that history always returns to. If markets truly reflected reality, would this balance look the way it does? At this point, the question becomes unavoidable. So what exactly is silver supposed to be? An investment? A speculation? A path to wealth? Not quite. Here's the distinction most people miss. Silver won't make you rich. It protects you from becoming poor. That difference changes everything. Throughout history, during moments of extreme monetary stress, Weimar Germany, Zimbabwe, Argentina, Venezuela, paper currencies collapsed quickly and without warning. Savings evaporated. Salaries became meaningless, but tangible assets held their ground, not because they created wealth, but because they preserved it. This is the role silver plays. It is not a bet on price. It is a hedge against failure. Like fire insurance on a house, You don't buy silver hoping for disaster. You buy it because history suggests that systems break, sooner or later. And silver, unlike many modern financial products, has no counterparty risk. It doesn't depend on a promise, a contract, or an institution staying solvent. It simply exists. That said, silver comes with its own danger, volatility. Its price can double and then collapse. It can test patience, discipline, and emotional control. Anyone who held silver in 2011 learned this lesson the hard way, which is why silver should never be misunderstood as a shortcut. It is not a vehicle for excitement. It is a tool for resilience. True financial education doesn't start with learning how to win. It starts with learning how not to lose. That's why long-term survival strategies always look boring at first glance. And that's exactly why they work. There's a story many silver investors like to tell themselves. One day, the manipulation will end, the system will break, and silver will finally be allowed to reach its true value. This is where a new illusion begins. Because no market is ever completely free. Gold is managed, silver is managed. Stocks, bonds, currencies, even crypto, all are shaped, guided, and constrained by forces far larger than individual participants. Financial markets are not neutral arenas of exchange. They are arenas of power, and power does not disappear simply because people wish it away. Yes, silver's price can rise sharply. Yes, it can shock the system. But when that happens, and how far it goes, is never random. It happens when those who hold influence allow it to happen. This is the uncomfortable truth most people avoid. Understanding manipulation does not mean you are immune to it. Believing that a single asset will set you free is just another version of the same illusion money has always sold. Real financial maturity begins here, not with rebellion, but with awareness. With understanding where the boundaries are and refusing to destroy yourself by charging straight into them. Because the most dangerous traps in finance aren't built to steal your money. They're built to steal your patience, your discipline, and your judgment. So what does history really teach us? Empires rise, empires fall. Monetary systems come and go. Gold and silver remain. But that is not the real lesson. Silver can protect you, but it cannot free you. Freedom does not come from metal. It comes from understanding. Because the most dangerous systems are not the ones that rule through force, chaos, or violence, but the ones you barely notice while living inside them. As Michel Foucault once said, the most effective form of power is the one that remains invisible. Silver is visible. Inflation is visible. Crises are visible. Power is not. And as long as power stays unseen, people will continue to confuse protection with freedom. Being prepared does not mean predicting the next crisis. It means accepting that crises are part of the system. You don't carry a shield because you know the battle is coming. You carry it because history says it always does. Silver is one piece of that shield. But the real shield, the only one that truly lasts, is knowledge. Your awareness, your ability to see the system for what it is. Now look at the device in your hand. There is silver inside it. You use it every day. You never think about it. Maybe that's the point. The most valuable things are often invisible, like silver, like power, like understanding. If this raised questions about how money truly works, consider subscribing to Moneta Historica. Money speaks, history hides, we uncover.